Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Good morning, and let's take stock of the situation. The SGX Nifty has been a bit volatile. We'll come to that in a moment. First, the global roundup. So the US markets did okay on Friday, by the way, but multiple Fed speakers during the weekend have continued with their hawkish stance. I read about three statements from three different people talking about that. In fact, Janet Yellen in a CNN interview mentioned that the Fed is going to need skill and luck to bring inflation down while maintaining labor market strength. Amazon sellers are seeing scary holiday season as consumers pull back, and that could be interesting to see if indeed uh, the US consumer finally blinks, if she or he does. Oil is open weak, slightly lower, uh, as traders weigh demand as well as US price cap plan. So it could be an interesting next fortnight for what oil prices do, and thereby what the sentiment even on the Wall Street stays. Typically, lower oil does work wonders, even if it's a known phenomenon. But what will work, or if at all, is the strength in the global markets. So Asia was expected to do well because the US markets did reasonably well in Friday's session as well. Will come up on your screen next. 2% for the Nasdaq, 1.5% for the S&P 500. You couldn't quite complain. Dollar came off as well. The next set of indicators will show you the dollar index, which came off a little bit from the levels of last week. So 108.4 from nearly highs of 109.9 or thereabouts. Um, it sparked a bit of a pullback rally in risk assets like Bitcoin to 22,224. Remember, viewers, last week, I think we saw a number which is closer to 18,500 or thereabouts. The US 10-year yield kind of staying steady at about 3.31% odd mark. So there is no big shakes in any fashion whatsoever. So essentially, the world is looking to be a decent outing. The SGX Nifty is not. It was pointing towards green some time ago. Right now, it's looking like it's just buckled down. I mean, nothing too dramatic, but just a bit lower, if you will, for the SGX Nifty as well. So that is interesting. It's a day devoid of too many news. So keep that at the back of your mind. Now, let's take stock of the trade setup. First, okay, let's watch out for this week. US inflation and is going to come out. The BOE rate decision was going to come out. Now it's been delayed by the week because of the mourning, because of the, the 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 passing away of the Queen. India inflation and IP data will come out today, so that is something to watch out for. And PM Modi will attend the SCO summit in Uzbekistan on September 15 and 16 as per the MEA. There's no official report from our end about whether he and China's Xi Jinping will have any kind of meeting or no. So we'll wait for some official statements. But yes, it could be a big one if that were to happen. So all eyes will be out on that. What's the trade setup therefore for the day looking like? Well, uh, oil rose a little bit, even though it started the week lower, but last week it rose a little bit. So about 92, 93 for Brent. But the falling VIX and benign global markets may support the up move that we are underway. Even though Friday came off a little bit, and even the SGX Nifty's come off, the larger deck is poised on the upside. So keep that at the back of mind, viewers. Nifty 50 DMA crossed the 200-day moving average. Apparently, it indicates bullishness, and sector rotation is clearly at play, right? Because we saw banks which had hitherto outperformed the Nifty meaningfully take a bit of a backseat, and in Friday's session, IT came to the fore. In fact, Nifty IT is seeing a bounce from oversold levels. And could it be that the Nifty IT actually supports the Nifty, and the Nifty now does better than the Nifty bank simply because IT, to an extent, some metals, etc., might all start, some consumption stocks might come to the fore, and Nifty bank may pause. So maybe the Nifty actually does better than the Nifty bank if the move were to continue, of course. At a slightly broader end of the level, there's some traction seen in PSU banks on the charts, and metals both on the charts as well as the derivative positions. So therefore, those two are seeing some breakouts, and stocks within that pocket or those pockets could be interesting ones to monitor. Foreign institutional investors bought about 2132 crores worth of shares in Friday. DI sold about 1167 crores worth of shares. Now, what are the stocks to monitor on a day like this? Mind you, I repeat, it's a day devoid of too many news. So there's a Hindu Businessman report that Adani Realty is in talks to merge with DB Realty. There is news around Oberoi Realty, which has approved a scheme of amalgamation from its 4 subsidiaries, and Ashok Leyland, which is in accord with Libertine for technology platform. I haven't given the news flow, for example, on Anupam Rasayan, because there is a fire which is broken out in one of its factories in Gujarat. And maybe, I mean, we've seen what happens to incidents like those and what it does to the sentiment on the stock. It recently happened with Deepak Nitrite as well. So I would watch out for Anupam Rasayan. And let's move on from this plate. I'll watch out for Anupam Rasayan because that could be a stock that could see some bit of a pullback. I'll watch out for Granules. There was a report last week from one of, I think on ET Now, that PI Industries wants to buy Granules. I may be wrong, but I think that was the nature of the report. Or Aegis Logistics, which the Nomura analyst Priyanka Biswas had come and said that they see some fairly stiff target prices on account of the move to LPG from natural gas in a lot of places. And Aegis benefits because it's a principal importer logistic machine for LPG. So could be interesting stocks to monitor. There is okay. There is a query on paint stocks. I'll get to that in a moment. First, City View on Infosys. They have a buy with a target price of 1725. From the City Gems conference, there are some takeaways. They say that management remains confident of delivering FY23 revenue guidance of 14% to 16%. The margins will likely be at the bottom end of the guidance band of 21 to 23%. That may not be something that will please the street too much. And they say that the key risks remain the prolonged US-Europe slowdown and pressure on billing rates. The key with Infosys viewers, though, remember, all across the last, over the last 3 days, that whether Infosys will have a buyback come October is now spread out. Because the buyback date of the last buyback ended on 8th of September. From the 9th of September, everybody's been starting to sing that song of whether Infosys will have a buyback, what's the extent of the buyback. Now, that point being, who knows? Yes, it's a probability, but who knows? But there's been a bit of attraction in Infosys for that. Citi's note, of course, is completely different, being that they are just looking at fundamental reasons why they are wanting to give a buy on that one. They mentioned that there are key risks, which are the pressure on billing rates is the other key thing that Infosys would have cited in that conference. And that is something that we all got to keep in mind, even for the broader end of the spectrum, a bunch of stocks. As IT is showing that bit of a bounce, keep that valuation check in focus, viewers. Some derivative recommendations since it's Monday morning, and a lot of you have said that these are things that work very well. So we brought two, one from MK and a couple from ICICI Direct. So MK says that the stock could see a rise. Gujarat State Petronet, the stock could see a rise to 265 levels, which is 1.618 of the Fibonacci retracement. The closing price at 254 was above its August swing high of 251. It increased by 6.1% on Friday with very high volumes, with nearly 16 times weekly average. OI increased by 38% on Friday, and buying was driven by the derivatives segment. So clearly there was a lot of traction on this stock in Friday's session. Let's see if there is more in store. MK believes from 254 odd, it could move up all the way to 265. I think that 265 is based on the derivative levels, but let's wait and watch. Then ICICI Direct has a note on United Spirits. They said the stock has witnessed significant delivery-based activity last month in the range of 750 to 800. They believe downsides are limited, and they believe the positive momentum is likely to remain intact in the stock above this 750 to 800 level. So if indeed the stock stays above 800, it could be a big positive for United Spirits, according to ICICI Direct. In fact, I think they were underweight or short call on Muthoot Finance, if you will. They're saying that the stock has consistently underperformed the broader markets in the past 3 months. It witnessed aggressive short positions since the May series, and any pullback has failed to sustain. Moderate recovery, as they say, failed to surpass its call base of 1200. It's closed below its second highest put base of 1040, and they believe the stock will continue its underperformance and move below the 1000 levels. The current market price, of course, is about 1045. So they see about a 45 rupees ton move on Muthoot Finance. So do watch out for this one if you want to trade. There are a lot of you who want to do these trades, and here are a couple of brokerage reviews. There's a query on paint stocks amidst keeping oil prices in festive season in mind. Well, I must tell you, Balram, that if you hear the interview of Amit Singhal of Asian Paints last quarter, he said that, July, August, September, maybe, he's not expressed any kind of skepticism, but he says even if July, August, September may be a slightly pale month. He doesn't see any issues because according to him and his math, paint accounts for only 1.5% or 2% of the overall cost. And therefore, they have not seen any kind of pullback in spend. Even if Havells had said that there's a pullback in spending, um, Asian Paints said that there was no pullback that they saw. And if indeed oil prices are lower, then that will only aid this kind of margin performance. So let's wait and watch. It could be an interesting one to monitor. You're right that lower oil prices will also aid sentiment. But I think the festive season demand should spur or keep the paint stocks intact, of course, if the markets stay okay. So pick and choose, but yeah, it doesn't seem to be a very difficult thing to monitor. Yeah, this is the interview. Thanks, Virat, for pulling it up. And trust Virat to do that every single time. He's brilliant out there. But yeah, this is the interview that you might want to catch in order to get a lowdown of what could happen to paint companies in Q2 and Q3 onwards. That's the long and short of it, viewers. Watch out for Anupam Rasayan. Unfortunately, could have a bit of a down day. Some other trading recommendations. Watch out for the real estate names, and those could be interesting as well in the session. But from a sector perspective, IT and to an extent, some of the PSU banks remain the ones in which there could be broader traction. Thanks so much for tuning in, viewers. Have a safe day and have a great week ahead.